Well, good morning, everyone, and welcome to our much anticipated webinar to share our latest West End retail turnover forecast. I'm delighted yet again to be joined by Paddy Gamble, Director, Head of Retail Strategy and Analytics at Colliers, who we have worked with to deliver today's Insights report. As you will remember, we released our first recovery turnover forecast a year ago, back in February 2022, where we forecast that based on a number of drivers, the district would return to its pre-pandemic turnover levels of £10 billion by 2025. However, the terrible war in Ukraine, an ongoing energy crisis, cost of living crisis, alongside the economic and political turbulence, has combined to create a perfect storm of uncertainty. So whilst we revised our forecast in October, we again thought it prudent to re-evaluate our forecast to give a more up-to-date picture of what to expect over the next few years. Forecasting, as Paddy will tell you, of course, is an ever-changing model. We cannot anticipate every change. However, we hope that this update, which now includes exclusive insights on the impact of the Elizabeth line on West End performance, as well as a focus on the changing economic outlook and how that outlook is impacting on the West End, will prove insightful and useful. There will always be an opportunity to ask Paddy questions at the end of the session, so please do feel free to enter any burning questions you may have into the chat box as the screen as you go. So I'll hand over to Paddy now to take you through the detailed analysis of 2022 retail and leisure West End turnover data. Paddy, over to you.
Thanks, Dee, and good morning, everyone. As Dee says, I'm Paddy Gamble. I head up or co-lead the retail strategy and analytics practice at Colliers. So hopefully most of you are familiar with our West End turnover work. As Dee said, first launched sort of just over 12 months ago. Colliers works very closely with New West End Company to provide an understanding of current performance trends across the West End and to provide a forward-looking view, data-driven view on performance over the next 10 years. If we just jump to the next slide, please. We do this by utilising a number of key data points, which you can see on screen. We use transaction data from MasterCard. This allows us to understand spending behaviours across the component parts of the West End by merchant category and by consumer type and origin. Mobility data, blended with consumer profiling, provides a really granular view of footfall across the West End streets and helps us to identify how the performance differs by residents, workers and wider domestic or international visitors. On top of this, and to start looking to the future, we overlay wider economic, population and tourism projections relating to both London and the wider UK economy. Next slide, please. We attach and analyse this data to a number of key trading areas, and as we step through the presentation, you'll see that we aggregate our analysis and forecasts to these key geographic areas. Next slide, please. And also by key trading streets. Whether it be analysis zone or trading street, we've built up our view on sales based upon the current occupier and product category mix present during 2022 in each of these zones. So essentially we're looking at the latest space mix. So if we start by looking at the data for 2022 and first take a look at the two core metrics of performance for the West End, footfall overlaid with spend. I've previously used this slide, which blends MasterCard data with the Colliers mobility data to highlight the disconnect between footfall and spend as we emerged from the pandemic. As consumers returned to the West End, we saw spend outperforming footfall. The divergence between the two, a result of consumers having an increased propensity to spend when they come in. For example, a worker that might have previously been in 5 days a week, now back 3 days, but their spending behaviour largely returning to normal. As you'll see, we now have a full view of data for 2022, and spend continued to outperform footfall throughout the year and grew rapidly in early 2022. Whilst the second half of the year saw this growth plateauing, being impacted by the slowdown in domestic spend as a result of the challenging economic environment and impact of cost of living crisis. Footfall continued to hover around 20 to 30% below 2019, suggesting that these levels could potentially now be considered the new normal. Next slide, please. That Previous slide was total spend and total footfall. The MasterCard data allows us to isolate the international spend, whilst the mobility data allows us to isolate the international footfall. And if we look at this data, international expenditure across the West End has increased steadily throughout 2022 and is replicating a similar footfall to spend dynamic, with spend outperforming footfall throughout the year. This trading dynamic suggesting that international footfall is being driven by those with greater purchasing power, e.g. more affluent, and we've seen a strong return of US visitors and those from the Middle East, or those with a greater propensity to purchase. Next slide, please. If we continue to look at international spend, these thematic maps show the concentrations of both domestic and international spend. You'll see the map on the right highlights how international spend is a lot more concentrated. In a couple of slides, I'll show 2022 sales by trading zone, and this will show we've seen some real jumps in performance for some of the trading zones, such as Regent Street, Bond Street and Mayfair. When I presented this work 12 months ago, these were areas that had the weakest performance in 2021, sorry. Why? Because this is typically where a lot of international spend is concentrated, and these areas needed to see a return of international visitors to help drive their recovery. 2022 has seen the return of international visitors, and actually at a quicker rate than we anticipated 12 months ago, and this has really helped drive performance on a localized level for a number of the trading zones that we analyse. Next slide, please. If we continue, if we keep looking at the international versus domestic theme and look at average transaction values, how much do visitors typically spend per transaction? The darkest of the blue lines is showing as domestic ATVs indexed against a pre-COVID baseline. As we emerged from the pandemic, we saw much higher ATVs. We believe most likely as a result of consumers releasing up pent-up demand as they return to the West End. However, these increased ATVs started to recede at the start of the year and have remained below pre-pandemic levels for most of 2022, a potential impact of the cost of living crisis. However, if we look at international ATVs, these jumped in the second half of 2022, in line with increased international footfall recovery, and have remained largely above pre-pandemic levels throughout 2022, and so really helping to compensate or cancel out some of the weaker domestic ATV performance, particularly as we saw international visitor numbers were increasing. Next slide, please. I appreciate there's quite a bit of data on this slide, but what this is showing is the relative ATV performance across merchant categories and across trading zones. The slide highlights the granularity of the data that we're analysing when assessing full year trading performance, and we use this data to track on a monthly basis how each area or category is performing. I won't go through each one in detail, but if we to just focus on jewellery and giftware, for example, so there's sort of those charts to the bottom left hand side of the slide, what we see is that overall ATVs are above 2019 levels for most areas, well ahead for areas such as Regent Street, Bond Street and Mayfair. But for Oxford Street West, they're actually below 2019 levels for this category. It's important that we look at the data at this level and not generalise an entire category or geographic level. That difference for Oxford Street West likely being driven by the dominant market position within this category in this trading zone, or by the customer it serves, for example, a potentially more domestic focused than international. Next slide, please. Now, if we start to look at monthly performance in a bit more detail. It seems a long time ago, but the start of 2022 remained challenging as we got through the Omicron wave. You'll see that areas were trading well below 2019 levels, and this was actually the case for the first 4 trading months of 2022. As we then sort of started to move through 2022, monthly performance was in line or above pre-pandemic levels for most trading areas from around May onwards. And then sort of partway through last year, we actually, as Dee said, generated a reforecast, and I represented a lot of this work. And at that point, we were really starting to move into a period of economic uncertainty and the cost of living crisis. I'm not actually sure which iteration of government we either had or were about to get, but we essentially expected the final quarter to be much more challenging, or the final half of the year even to be much more challenging. However, the anticipated slowdown, or what we anticipated at that point in the year, it actually really failed to materialise, and trading, whilst challenging, was more resilient than we expected, and we experienced more of a sales plateau than a decline. Next slide, please. We can't look back at 2022 performance without looking at the impact of the Elizabeth line. Opened in May, and by the summer, around 13% of all visitors used the Elizabeth line as their main mode of transport into the West End, a real significant amount of people using that line. We'll touch on some of the more positive ongoing or future benefits of the Elizabeth line shortly, but what you can see on the right-hand side of this slide is some analysis of domestic spending for Oxford Street East and the area around the new Elizabeth line station at Tottenham Court Road. What we have done is benchmark this spend versus overall West End performance on a monthly basis, and this highlights how much of a strong performer Oxford Street East has been in 2022 versus broader West End performance. This overperformance is most likely due to the improving retail offer. You can see it started to outperform before the line opened, but also the increased footfall from the Elizabeth line opening being converted into sales has meant that this overperformance has been maintained throughout the year. Next slide, please. So what does all this mean for overall 2022 performance for each of the trading areas and zones? You'll see Oxford Street East is leading the way and is now 9% above 2019 sales, whilst Oxford Street West had the weakest performance versus 2019 and sits around 13% below 2019 levels. On one of my previous slides, I flagged up the importance of the localised international spend, and the other areas to flag up on this slide are Regent Street, Bond Street and Mayfair. These areas were lagging well behind in 2021 as we awaited the return of international visitors. International visitors have been returning and at a slightly quicker rate than we anticipated 12 months ago, and this has really pushed these areas to levels above the broader West End levels of performance. Would probably call out Regent Street being a particularly strong performer in 2022 and second only to Oxford Street East, an area that, as we previously sort of highlighted on the previous slide, that was an area that benefited from the Elizabeth line opening. So really strong performance from Regent Street. Next slide, please. If we now just briefly touch on overall category performance, department stores, health and beauty and electrical goods are all essentially in line with or above 2019 levels of performance, have had the strongest levels of performance when compared to 2019 sales. Whilst it's also worth highlighting the clothing and accessories growth versus last year at around 82%, a category that has strong representation across Regent Street, Bond Street and Mayfair, and so that jump in performance is largely linked to the strong performance for those areas and the return of international visitors. Next slide, please. And so to summarise 2022 performance before we move on to sort of our future view, West End turnover in 2022 was 8 billion, a 56% increase on 2021, but around 11% down on 2019 levels. And as I highlighted on the street level analysis, there'll be areas that outperform or underperform that 11%. Annual turnover was below last year's prediction. However, the second half of the year exceeded expectations and we had a slight sales plateau rather than a potential anticipated slight decline given the economic uncertainty. And this was partly driven, or that robustness was partly driven by a return or over a slightly faster return of international overseas visitors than we anticipated. Spend outperformed footfall throughout the year, demonstrating the new type of post-pandemic West End consumer, fewer in number, but coming with an increased propensity to spend and potentially spending more. International average transaction values remain above pre-pandemic levels. However, domestic gradually fell across the year in line with the cost of living crisis. Compared to 2019 levels of performance, the strongest trading categories were health and beauty, electrical goods and department stores, all in line or above 2019 levels of performance. Clothing and accessories had very strong year-on-year performance, largely linked to the return of international visitors spending on Regent Street, Bond Street and Mayfair. The opening of the Elizabeth line saw an increase in footfall around Bond Street and Tottenham Court Road, with the new line now bringing 13% of visitors into the West End and has helped contribute to an observed overperformance for Oxford Street East. Next slide, please. Now we look forward to the next 10 years. So we could probably just jump over to the next slide as well. So now, as I say, sort of starting to look forward. Our approach to understanding West End performance is very much built around, and again, this is probably for those that have dialed in before, a relatively familiar slide, but it's essentially showing, you know, how we build up our view of performance and built around that, you know, our understanding these key drivers of performance that essentially will impact the performance over the next 10 years. Our data linked to these performance drivers has been updated, or we continually continue to monitor and make sure that the latest forecasts reflect the latest consumer dynamics and market conditions. You'll see how we traffic light the data points. Red is weaker performance or a downgrade, whilst green is a positive indicator versus our previous forecasts. First thing you'll notice is there isn't much green. The outlook is more challenged than when we produced our first forecast over 12 months ago. I won't go through each of these in detail, as I'll touch on some of the key ones on the following slides, but you'll see both economy and expenditure flagged as red. We're in a more challenged environment than 12 months ago, and the cost of living and inflation will impact West End performance, or at least impact the forecast over the next couple of sort of short-term forecast for the next couple of years. However, to counterbalance the negative outlook for the economy and the domestic expenditure, you'll see that tourism is flagged green, it's green stroke amber. The rate of return for international visitors is ahead of where we thought it would be 12 months ago, and so will be a key driver of performance, in particular for the next 12 months, as it will potentially compensate some of that weaker domestic trade. This is obviously a huge performance advantage for the West End when compared to other UK towns and cities that are typically more reliant on the domestic consumer. As I say, I won't go through all of these in detail, as the next few slides will touch on some of these key drivers in more detail, but each of these are elements, are things that we have looked at when pulling together our 10-year forecast for the West End. Next slide, please. So first, sort of the economic growth, you know, cost of living and inflation is forecast to impact domestic consumer expenditure for 23 and 24. Consumer expenditure forecast to decline approximately 3% in 2023 and potentially 1% in 2024, whilst growth is expected from 2025 onwards, with London consumer expenditure forecast to be around 21% higher than 2022 levels by 2032. Just quickly to flag, and probably to answer a question that will always come at the end of this presentation, these exclude inflation, as does the 10-year forecast that we're about to get into. The slowdown in domestic consumer expenditure will limit economic growth in 2023. You can see 2023 is essentially flat, with growth expected to return from around 2024 onwards, with the London economy forecast to have grown by around 20% by 2032. This outlook is obviously more negative than 12 months ago, and the consumer expenditure element is something that will, when I get onto the forecast, has pulled down that forecast for the next couple of years when compared to the forecast that we produced 12 months ago. Next slide, please. Now, international. Inbound international visitors to the West End has outperformed the expected rate of recovery anticipated at the end of 2021. However, despite the more rapid return of international visitors, overall volume of visitors is not expected to hit 2019 levels until later this year, probably sort of around mid-year summer months, when we get back to 2019 levels, and will then continue to grow beyond that point. And the growth beyond that point is an important thing to flag up, because, you know, from, you know, after the next couple of years, international will be a particularly strong driver of growth for the West End. Next slide, please. On one of my earlier slides, I highlighted how we were already seeing a positive impact of the Elizabeth line. A key factor is that the line cut journey times and made the West End so much more accessible for a lot of people. The work that we did earlier in the year went into more detail on this, but one of the things that we identified was in that piece of work was the area of influence for the Elizabeth line. We identified that around 6.8 million London residents would live within the area of influence for the Elizabeth line, and that would positively impact their propensity to visit the West End. Next slide, please. Continuing our look at the Elizabeth line and our previous work around its positive impact. The outputs from this piece of work are a core input into this piece of work, and the positive impact is included within our 10-year forecast for the West End. But just to highlight some of the key benefits the line will bring. We previously identified or estimated around 800 million in sales will be influenced by the Elizabeth line by 2031 versus a scenario where we had no Elizabeth line. You know, between opening in May and up to 2031 or 2032, that's the equivalent of around 5 to 7 billion cumulatively by 2031. Again, to put that into context, that's almost like giving London back a year of lost sales during the pandemic. So a real significant benefit for the West End. The performance uplift will be driven by around a 13% net increase in entries and exits at West End stations now that the line is fully complete and fully operational. And obviously, you know, again, there'll be localized benefit, and actually that 13% net increase for the West End, actually around sort of Bond Street and Tottenham Court Road, that's 30 and 50% respectively. And obviously, you know, the line is now open, and it's probably worth flagging up that, you know, it is probably delivering slightly stronger performance than we anticipated. So, you know, since May, the line has already carried more than 100 million passengers, you know, surpassed earlier or last month. Now that we're in March, it was surpassed in February, and performance is tracking ahead of that pre-opening forecast. So, you know, it has given a real boost in the arm for the West End at a time when needed. Next slide, please. Probably touch on these ones relatively quickly. So future footfall projections also account for residential and worker population growth around 6% for London up to 2032. You know, that will positively impact the volume of footfall that we see across the streets across the West End. Next slide, please. Whilst population and expenditure growth will positively impact sales numbers for London and the West End, ongoing expenditure shift to online will impact growth rates for sales going through the tills, and continued online growth has been accounted for within the projections up to 2032. You'll see on the chart that after the pandemic-driven spike, online growth anticipated to slow over the coming years, but will continue to grow. And the chart is showing an average for online sort of retail, and we also recognise and factor in that there will be differing growth rates by different trading categories. It is important to also flag up that whilst the move to digital channels will continue, the store will continue to be increasingly important touch point for consumers. And so whilst the physical sales values may be impacted, the overall value the store delivers for both consumers and occupiers in the West End will not. Next slide, please. So what does all this updated data mean for our forecasts for the West End? I think a key focus when we've sort of presented this work has been sort of the 10 billion target for the West End, and we forecast that rail sales remain on track to exceed 10 billion by 2025. However, as a result of the more challenging economic outlook, our forecast for West End performance has been downgraded to 8.9 billion in 2023. Previous forecast was around 9.3 billion, and then that will grow to 9.4 billion in 2024. Next slide, please. This is all positive in terms of overall recovery and growth, even if that growth is anticipated to be lower for the next couple of years. However, if you're an occupier in the West End, you are trading to make a profit from your sales, and trading dynamics will be challenging throughout 2023 and into 2024. Significantly increased costs, despite reaching their peak, will continue putting pressure on consumer expenditure, and from the occupier's perspective, the operating costs and margins through to 2024. Our strategy and analytics team at Colliers do a lot of work with occupiers on things like store estate planning, helping them understand where they should open a store, potentially close or upsize a store. And whilst that decision will always involve a sales forecast, the investment decision will always be based upon, will that store make a profit? Over the past sort of 12 to 18 months, while we've been doing this type of work with New West End Company, we quite often get asked about sort of, well, what's the economic outlook or rising cost means for occupiers? And so for the next couple of slides, we'll look to answer some of the typical questions we face on this subject. Next slide, please. Retailers' P&Ls are being disrupted by increased costs and broader economic headwinds. So, for example, and what you can see on screen here is a theoretical sort of retailer's P&L. So first, if we focus on margin erosion, retailers' supply chains are being impacted by increased costs for raw materials and goods. For businesses, this means that they are faced with the decision to either pass on the cost to the end customer or absorb the rising costs within the gross profit margins. For most retail businesses, it will be a balance of the two, resulting in reduced margins, with the increased pricing also potentially impacting total volume of sales. Alongside this, retailers are facing significantly increasing operating costs. I've highlighted on this indicative P&L the operating cost line. This includes the likes of staff costs and utilities, alongside other costs to run the store. And this element of the P&L is clearly being impacted by the broader economic conditions, with staff costs and energy costs in particular impacting store level profitability. Next slide, please. We've pulled in a number of indicators to really highlight how these costs have spiked and when they're likely to fall. And as you'll see, the key P&L lines highlighted on the previous slide will continue to be pressured throughout 2023, with some inflated costs continuing into 2024. Next slide, please. So what's the point I'm trying to make, or what are the anticipated questions I'm trying to answer? Essentially, what we've got on screen is a theoretical P&L. Assume this is for a typical clothing accessories retailer in the West End, and it is experiencing the average impact and then recovery that I've just taken you through during the earlier part of the presentation. This retailer is now back at 2019 levels of sales. Great. And it has potentially benefited from some element of rebased rent that will provide some relief on occupancy costs. However, due to the broader economic conditions, its product margins have been eroded and its operating costs have increased. It means that the same store in the same location generating the same levels of sales is still in a very challenged position from an operating profit perspective, and it will need to get through the next couple of years to get to the point that it is truly operating at 2019 levels, and by that I mean generating the same level of profit. Next slide, please. So that is it from me. Just to quickly wrap up and not necessarily end on the more challenging negative note for the retailers. West End turnover in 2022 was 8 billion, a 56% increase on 2021, but around 11% down on 2019 levels. Annual turnover was below last year's prediction. However, the second half of the year exceeded expectations. Again, partly driven by the more rapid return of overseas visitors. Spend outperformed footfall throughout the year, demonstrating the new type of post-pandemic West End consumer, fewer in number, but coming with an increased propensity to spend and spending more. In terms of our forecasts, the next 12 to 24 months will continue to be challenging for consumers and businesses, with both facing rising costs. However, the West End remains on track to deliver 10 billion in sales by 2025, with international visitor numbers forecast to fully recover to pre-pandemic levels this year, which will really help to compensate some of the potentially weaker domestic sales performance. Thank you.
Paddy, thank you as ever. That was very thorough and incredibly interesting. Just a reminder, everybody, please do get your questions in the chat box so that we can really test Paddy's knowledge this morning for the next 15 minutes or so. Paddy, to kick us off, I have got a couple of questions. Firstly, when producing this report, has there been anything that's particularly surprised you? Were there any kinds of trends, positive or negative, that you didn't expect to see in 2022?
Yeah, I mean, I think that you touched on forecasting. It's not an easy thing, and probably, I would have stood by my forecast at the start of the year, and it was slightly lower than we anticipated. But the difference is really with that international bit. I think probably we did expect a slightly slower recovery, but actually it's been quite a rapid recovery globally in terms of international travel. So that would be one thing. I think one thing I didn't expect to be was 12 months later sitting here talking about, well, we've had two governments and different prime ministers and so on, and that was a disruption, and that's what knocked on the economic, like really impacted those expenditure or economy measures. I mean, yes, we may have missed those targets economically. I didn't expect it to be for the reasons that we've had.
Yeah, absolutely. Thanks, Paddy. And then of those influencers or drivers that we see, the levers in the report, which particular ones do you think matter most to us now in 2023 and further down the line?
I mean, again, I think it's international is the key thing for London. I think I sort of flagged up, that London has been more robust in the second half of the year than potentially we anticipated, and potentially versus other UK towns and cities would have seen a decline. And actually London's advantage is the international visitor, and in terms of volume of international visitors, one of the charts that I showed is that that will be a disproportionate driver of future footfall. And I think it's really important that we're open to international visitors in terms of their expenditure and so on. So we'll no doubt probably get one of our questions will be about tax-free and so on. The international visitor is a key driver of future performance for the West End and is very important sort of going forward, as is the UK economy and getting that back on track. But I think growth for the West End will largely be linked to international.
It's almost like you predicted it, Paddy, because the very next question that has just come through, what is your view on the impact of the international visitor numbers with the loss of tax-free shopping? How does it place London versus other European centres?
Not having tax-free is a barrier to spend for some international visitors. I mean, I think I always say it's not a barrier specifically to visit. I mean, London is a global destination. People visit for culture, for leisure, for entertainment and retail. And for some of those high spending visitors from certain markets, that may come for a European trip, for example, it will impact their propensity to transact in certain categories and certain retailers and so on. That will equate to lost spend for the West End. It could go to Paris, it could go to Milan for certain product categories, certain retailers and so on. So yeah, I mean, it's a barrier, so it will impact. Sales could be higher if there was tax-free benefits for international visitors.
Absolutely. And I think it's fair to say through other research that we have conducted, whilst our international visitors are coming back to the UK, they are certainly flocking back faster to other European cities, whether that's American GCC states. In other European, they are far higher in terms of volume and return than they are in the UK. So that's definitely one to watch, and would be an opportunity, I guess, for us going forward, particularly with the return of tax-free. Paddy, in terms of the Elizabeth line, just moving on to that now, has this delivered the kind of transformational volume of visitors into the West End that we were hoping for, or is it still a little bit too early to tell?
No, I don't think it's too early to tell. I mean, if we just look at the time that it's open between sort of May and the end of the year, and that's the point I was really trying to make on the slide where I focused on Oxford Street East, is that for that area, there's very localized benefit as a result of the Elizabeth line. So I think, yes, it's delivering the benefit. I think it's probably in terms of passenger numbers, it is outperforming sort of the expectation set by TfL. So I think that 100 million sort of passengers surpassed in February. I think that's an earlier landmark being delivered than anticipated. And yeah, I mean, again, you look at the the tube statistics that come out on the NWEC sort of emails from Archam, twice a week, and you look at the dominance of some of the Tottenham Court Road stats, it really is delivering increased passenger numbers, which is translating to footfall numbers on a very localized level. I think when I did the Elizabeth line work sort of earlier in the year, some of that is sort of people transferring onto the Elizabeth line. So, for example, Oxford Circus is slightly less dominant in terms of passenger numbers, but I think from a sales perspective, you don't see that as necessarily a negative sales impact. So it almost feels as if, footfall patterns may have changed, but actually there's local, and that hasn't impacted sales locally, but actually we've seen a positive impact locally from a sales perspective. So it almost feels like there's only been a positive impact, and it's greater than we anticipated reopening.
Which is some good news. Paddy, clearly your forecasts are based on a number of drivers and they take us right out 5 to 10 years. However, do you have any predictions on what the coronation might bring us in the West End this year?
Again, I think such global events such as that, or events that have a global lens on London, it puts London on the map, and later down the line that can help drive international footfall at an event level, sort of during the coronation. I mean, clearly, again, you look back at the Jubilee and some of the previous events that we've had, they are played. It will be a time where London should be busier. People will be coming in to experience London during that time. Increased footfall, typically, again, should translate to increased sales, potentially for certain not all categories, but certain categories should see a benefit. So yeah, I think events such as that, they give a boost, potentially quite localized, but I think there'll be a benefit.
Yeah, I think so. I think the halo effect of just the additional volume of numbers coming into London, I would hope that we would benefit from. Paddy, get into some of the detail now. When you look at the sales performance, do you look at that by category mix, so types of businesses in the West End, and is there anything you can give on who might be doing particularly well, or any bit of insights into that?
Yeah. So obviously there's a lot of detail behind these slides, and so actually we do build it up from. So when I sort of was introing the work and I talked about we use the space mix that's present across 2022, we actually use the units that are present across 2022. So that space mix is by, we understand how much clothing by certain market positions, and likewise as you run through those product categories. So yes, it is accounted for. I think I sort of flagged up, there's two ways of saying how is performance, how are categories performing. On one hand, it's versus 2019, and I think I flagged up, the department stores, health and beauty and so on perform, pretty much in line or above 2019 levels. And then there's also, how are things performing year on year. So I sort of flagged up clothing and accessories has had one of the biggest jumps year on year, and that's largely because of the overall quantum of that category. It's one of the largest categories in the West End, but actually it's also one of the ones that's got the broadest mix from the discounters through to the luxury end of the market. And actually, in terms of sort of the product the market position element, I think it was probably mid-market discount that came back quicker in 2021 because it was serving a more domestic consumer. The more upscale, actually, it needed the return of international visitors, and this very much links in with the narrative that I was giving around sort of Mayfair, Bond Street, Regent Street, saw real strong growth year on year. That was linked to international visitors. That meant that actually the more premium to luxury end of the market would have had a great year on year performance within that category.
Thanks, Paddy. You'll be pleased to know 2 more questions, but I think our members have saved the best till last. Okay. The next one, actually, you and I touched on in a conversation that we had earlier this week. The question is, lots of redevelopment west of Oxford Circus. Is this built into your forecast? Do you expect to see a shift in spend from Tottenham Court Road, Oxford Street East?
So the 10-year forecast is almost like a current state. So based upon sort of the provision of retail in the West End at the moment. Clearly, on Oxford Street, there's a lot of redevelopment. In terms of what that provides, that would be an upside. So depending on sort of the provision, even if it's retail or office or whatever, that's going to change either the footfall dynamic and the offer that can be given to the consumer, which might change again the propensity for people to be drawn to that part of the street. So once that development is on stream, that would be an upside on the scenarios that I've presented.
Thanks, Paddy. And then lastly, a difficult question. What positive actions could or should West End landlords take to help drive retail sales?
That is a tough one. Well, I think one of the conversation we had for something else earlier in the week was around sort of do we ever get to a point where increasing footfall doesn't increase sales? And the way in which I actually answered that was like, footfall should always drive sales. We see more people, we should see more sales, but actually the retailers and the occupiers need to service the needs of the consumers that are coming in. And we're sort of we're aware of things like supply chain problems or actually staffing problems that might impact service levels and so on. That's where increasing footfall may not translate into sales. If the consumer comes in and the product isn't available because it's sold out, or the supply chain isn't able to get it into the store quick enough, or the store experience in a restaurant due to staffing shortages is not what the consumer would expect, that's where actually you're missing out on growth and missing out on sales. So I think it's about being ready for the consumers, making sure that when the consumers do come in, they get the products they want, they get the experience that they want, so that they do transact and they do come back. So I think it's just making sure you're delivering the best experience for the consumers when they come into the West End.
Thank you, Paddy. Thank you so much, Paddy, for the presentation and for answering all of the questions. And thank you to all of you for your fabulous questions and joining us today. Any follow-ups, please do get in contact with Paddy. His details are on the screen. The report, the launch of the report will be on our website from tomorrow. So please do go onto the website, download the report, and any questions, as I say, please get in touch. Thank you again for joining us this morning, and we look forward to welcoming you at another New West End Company webinar very soon. Bye-bye.